How to use ETFs for low-cost diversification in your portfolio. Hi everyone. In today's video, we are going to discuss how you can use ETFs or exchange-traded funds to build a diversified portfolio at a low cost. If you're looking for a simple and cost-effective way to spread your investments across different assets, ETFs might be a suitable option for you. What are ETFs? First, let's quickly define ETFs. An ETF is a type of investment fund that trades on stock exchanges, just like individual stocks. It holds a collection of assets such as stocks, bonds, or commodities, and its price moves throughout the day as shares are bought and sold. ETFs offer a simple way to invest in a broad range of assets without having to buy each one individually. Why choose ETFs for diversification? One of the biggest advantages of ETFs is the ability to diversify your investments with just one purchase. Instead of investing in individual stocks or bonds, an ETF gives you exposure to a variety of assets. This diversification can reduce risk because your portfolio isn't tied to the performance of any single asset. ETFs also tend to have lower fees compared to mutual funds, making them a cost-effective option for investors. How to use ETFs for diversification? Here's how you can use ETFs to diversify your portfolio. 1. Start with broad market ETFs. Consider starting with ETFs that track broad market indices such as BSE 500 or the total stock market. These funds hold a wide variety of stocks across different industries, giving you immediate diversification. It's a suitable way to get exposure to the overall market with just one ETF. 2. Add bond ETFs for stability. To balance the risk of stocks, you can include bond ETFs in your portfolio. Bond ETFs invest in government or corporate bonds, providing more stability and income compared to equities. This can help you create a more balanced and less volatile portfolio. 3. Sector and thematic ETFs. If you're interested in specific industries or trends, consider sector ETFs. These ETFs focus on particular sectors like technology, healthcare, energy, etc. Thematic ETFs, on the other hand, might focus on trends like clean energy or artificial intelligence, giving you exposure to emerging areas of the market. 4. Factor-based ETFs for strategic exposure. Another option is to include factor-based ETFs in your portfolio. These funds focus on specific factors such as value, growth, or momentum. By targeting these factors, you can gain exposure to stocks that meet certain criteria, helping you align your investments with particular market strategies or trends. ETFs can be a suitable tool for low-cost diversification. By using a mix of broad market ETFs, bond ETFs, sector ETFs, and factor-based ETFs, you can build a portfolio that aligns with your investment goals and risk tolerance. That's it for today's video. If you found this helpful, be sure to like, comment, and subscribe for more investing guidance. Thanks for watching. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.